Now we're going to go through reversal patterns. I'm going to show you how to identify these reversal patterns, how to work out the measured moves on the reversal patterns, and more importantly, how to trade them. So let's have a look at the slide and you'll see there's a couple of ones we're going to consider. We're looking at bullish versus bearish. We're looking at the inverse head and shoulders and the head and shoulders formation first. Now, many of you may have already heard of these patterns. I'm going to show you how I've used them and also when not to use them, because sometimes they produce moves that aren't realistic. So let's get straight into it, and I want to show you the textbook perfect example. First and foremost, you can see the inverse head and shoulders. This is a bullish reversal formation, and price comes down, creates a lower high, a lower low, an equal high, and then a high low. And then price proceeds to move up and break through what we call the neckline, which is the yellow line over here. So ultimately, if you look at this chart, you have your left shoulder, you have your head, you have your right shoulder, and then the yellow line is going to be the neckline. Now remember, when you look at real life examples, this neckline can be slanted, and you might also see different sizes of the left shoulder, right shoulder, and head. It's never going to always be textbook perfect. I'll show you in the real life chart what to expect. Let's look at the opposite one, which is the head and shoulders, which is also a reversal pattern. This one being a bearish one. You have your left shoulder, you have your head, you have your right shoulder, price breaks down the neckline, and ultimately you have continuation towards the downside. Now, how do you work out the measured move of where price should go and get a target from that level? Well, to do that, you need to look at the head. You want to take from the very tip or point of that and draw a straight line all the way to the top of the neck. Copy and paste that line above the neckline. When price breaks out, that's where price should move to. The same is true on the head and shoulders formation over here. You take it from the very top, draw the line straight to the bottom, copy and paste that below the neckline. When price breaks that neckline, ultimately it should meet the measured move. Now let's look at some real life examples so you can see how it actually works. The first one that I want to show you over here is an inverse head and shoulders pattern, and it's taken on Bitcoin. Now, price over here created a left shoulder, bounced up, created a lower low or new swing low. You can see the price action over here is lower than the left-hand side, and that is going to be the head formation, right? Price moves up then, again finds resistance along this trend line, that trend line being what we call the neckline. Creates the right shoulder, and ultimately when you see the consolidation around that neckline and price starts to close its first candles above, you have your trigger to enter the trade. Timing the trade over here, you would now put your stop loss below the expansive candle which led to this move up, and you hold that position up to the measured move. You can see the target was met. Price action actually went a little bit above that. In this instance, you had a 2.83 to 1 risk to reward ratio, which led to a 16.9% upside move. A pretty good trade. You had absolutely no drawdown. Price didn't come into the red zone at all, and that was a successful trade. Now let's move on to another one. In this instance, this is a trade that I would not take. So it's a head and shoulders formation which was taken on Ethereum. Why would I not take this trade? Well, sometimes you have to use your discretion and your understanding of markets to see that it's probably not worth playing all the way to the measured move, because in this instance, price would have literally gone to zero. So price moves up, creates the left shoulder, the head comes back down, creates the right shoulder, and then upon the breakdown over here, you would have been taking the trade. You could have held it halfway through, so it still did bring Ethereum price down, but it was never going to meet the ultimate measured move target, which would have taken it towards that $0 mark. So as a reminder of how to calculate the measured move on these head and shoulders formations, you simply want to look at the chart. You're going to take from the very top candle, which is where the head of the pattern forms, and you want to draw a straight line down all the way to the neckline. That line that would be formed over here, you copy and paste that, clone that line, and move it to the bottom of the neckline. So from the neckline all the way down, that's your move, right? From there to there, that is your measured move. In this instance, of course, it probably wasn't going to work out. It's not to say that Ethereum couldn't have gone to zero. Ethereum could go to zero, but we know that the probability is very, very slim and it's a less likely trade to work out, and therefore I wouldn't have taken this trade. In the next video, I'm going to show you how to identify the double bottom or W formation pattern, as well as the double top or M formation pattern. It's one of my favorite ones to trade, very easy to identify, and I'll show you exactly how to execute on that. I'll see you in the next video.